I want to talk about, kind of some thoughts on what the market's doing literally like at this moment. So the way I'm looking at this is like a Christmas market and a New Year's sales event, kind of like, Toyotathon or Lexus December to Remember. That's kind of what's happening in the market. But enough cliche. Let me break this down. Gas prices are going down and deflation is happening for companies like Walmart. If you Google it, look it up, they were talking about in their earnings call about deflation and how they're seeing deflation in prices of, stuff that Walmart sells, and stuff Walmart sells is kind of a lot of everyday stuff, right? So that's good news for you and the consumer and myself. And treasury yields are coming down. I mean, today we've got great repricing in the mortgage market. Interest rates had fallen well over like 1.25% in the last couple of weeks. So it's kind of eye-opening to see what's happened. And they've come out, and the weekly mortgage applications were up last week as mortgage rates went down. The real estate market is picking up. And by picking up, I don't want you to be concerned about the market prices. I want you to understand picking up meaning unit volume is way down. 2 years in a row, way down. We are on pace to sell as few homes as we did or less than we did in like 2009. So what does that mean? That means the market's gotten smaller. Back then the prices were going down. We had all the supply in the world and no demand. Now we have all the demand in the world and no supply. That is still happening. So the market is healthy, but it's smaller in transactions. So a lot less sellers, still tons of buyers, right? So what I'm looking at here is, what does that mean? Well, that bodes well for inventory, right? Because this could be an unlocking situation, unlocking inventory, because a lot of people would like to move. They have houses they want to move from. They have reasons to move, a lot of life events. And low mortgage interest rates in the mortgage they have now are not going to stop them. But the people that are kind of stopped may take a look, and I see them taking a look because there's people that would like to upgrade and they have a lot of equity. So the delta really isn't that high. So I encourage you to look at, instead of being scared of the rate, look at the actual payment, right? So this doesn't bode well for the new buyers, because the new first-time home buyers, that inventory, which in our areas say less than $600,000, a lot of that stuff that you buy has been, built for a while. And if they built it today, they would still have to charge like 40% more to build that similar home. For example, say like a Chesterbrook condo that's worth maybe $350,000, you might have to pay $550,000 if they develop that today. So I don't like what's happening. I see it shrinking for new buyers at the low end, and I don't think that's healthy in a lot of regards, but that's the market. I'm looking at builders as well, and I'm seeing them at higher profit margins because of deflation in a lot of goods and services in building. So I would say right now, buying new is a careful consideration. We need to pay attention to what neighborhood and what builder we're dealing with. They have the ability to reduce prices. Their profitability is super high. They are reducing prices. They are offering interest rate buy downs. I'm seeing sellers that aren't going to be stopped as well, because the life events are still happening. So there's a ton of pent up demand. I'm seeing folks that I'm working with buying homes for investment, putting tenants in them, and they are making sure that their children or grandchildren of the future can get a starter home by buying it now. And I'm advising many clients on that. I'm advising younger first-time home buyers to make sure they buy something, because as interest rates come down, loads of demand unlocks, especially at the low end. Everything's getting more expensive, and I think it has a ton of room to run. I think a $300,000 condo could easily go up 15% this year. I have a lot of clients looking at the upgrade, and now when these rates come down, they are looking at the upgrade, because if they have a lot of equity, they can do that. 2024 looks to be the beginning of a potential unlock for the market, such as we saw in the late 80s. And that was the last time we had a dynamic of high rates, big demand, and low inventory. What happened with prices was, as rates climbed, they stayed flat. And as rates decelerated and went down, prices accelerated again. I don't really, want that to happen. Like, who wants home prices to go any higher, right? I mean, who wants home prices to go any higher? I mean, I would like to see some things that are different, but again, this is the market we're in. The question we need to ask ourselves, right, is like, for the market you're in, what are the opportunities, that you can take advantage of? Are you a downsizer? Are you a first-time home buyer? Are you upgrading? Where are you? Are you a renter? Are you a landlord? Are you an investor for the long term? This is what we're talking about. So there is no one market. There are segments, and this is what I'm doing every day, and I've spent well over the normal time of video here telling you who I'm working with. So in review, new buyers, investors, downsizers, the best market we've ever seen for downsizers in my entire career. And upsizing due to life events, are you having more children, new family, things of that nature. So this is a long video, but I wanted to tell you, and I wanted to put it out there, as I'm going to do predictions in a few weeks for the new year. But what I'm seeing right now is happening so massive and happening so massively fast that I want to alert everybody to the fact that if you're going to be in the market in the next 2 months, 3 months, 6 months, right now, I want to be an owner versus being a looker in the spring. All right. Have an awesome weekend. Thank you for watching.